Hi, I'm Keon, a research analyst with Lipper, and I'm here to speak to you about fund flow activity for the week ended Wednesday, February 17th. Let's start by taking a quick look at last week's market activity. It appears that the market may have reached the bottom last week. After closing at a two-year low on February 11th, the S&P 500 index rebounded to gain 5.3% over the next three trading sessions. This reduced its year-to-date loss to 5.6%. The market took strength from better than anticipated economic data, which indicated that the U.S. economy was still continuing to grow, as well as the fact that the FOMC minutes from the Fed's January meeting indicated that they were considering putting a temporary halt to its monetary tightening policy due to all the global market turmoil we've been seeing recently. Let's turn our focus back now to fund flows. Starting with our macro groups, we see that equity mutual funds had net outflows of $3.5 billion last week. Taxable bond funds also took a hit as $2.3 billion left their coffers. Muni bond funds took in $578 million in net new money, while money market funds had positive net flows of $1.7 billion last week. Let's take a closer look at the equity mutual fund group now. The $3.5 billion in net outflows marked the six weeks out of 7 weeks where the group has suffered net outflows. This brings their year-to-date net outflows to just short of $15 billion. Last week's activity shows that once again domestic equity funds are responsible for the bulk of the net outflows. They had $3.6 billion leave their coffers last week, while non-domestic equity funds took in a little bit of money, about $144 million. The most significant outflow amongst domestic equity funds belonged to large cap core funds, which saw $950 million leave. Let's take a look at the ETF side of equities now. They also had net outflows last week, about $2.2 billion. Again, this was the 6th week in 7 of net outflows for the group. Slightly higher net outflows for ETFs, so their negative flows for the year today is $26.4 billion. The largest net outflows last week were split between U.S. and global products. On the U.S. side, we see PowerShares QQQ had about $600 million leave, while the iShares Russell 2000 ETF suffered about $400 million in net outflows. On the global side, there was the iShares MSCI Japan and MSCI Eurozone had net outflows of about $400 million each. Moving on now, let's take a look at our taxable bond fund group, starting with mutual funds. Group suffered $2.3 billion in net outflows last week. Once again, it was the 6th week in 7 of net outflows for the group. The year-to-date net outflows for taxable bond funds stands at about $11.7 billion currently. Again, we've seen that investors are continuing to run away from the lower quality issues as loan participation funds and high yield funds paced the net outflows last week with roughly $600 million and $200 million leaving their coffers respectively. Let's move on to our next group now, which is taxable bond ETFs. For a change this week, this group had a net inflow of $2.4 billion. It marked the 6th consecutive week of net inflows for the group, during which time they've taken in $13.4 billion in net new money. The largest inflows last week belonged to iShares products. We see the iBox high yield and investment grade corporate debt products taking in about $400 million each, while the 20-plus year Treasury and the 7 to 10-year Treasury took in $400 million and $300 million respectively. Let's take a look at muni bond funds now. The group had $578 million in net inflows last week, their 20th consecutive week of net inflows, during which time they've taken about $10 billion in net new money. The major players last week were the general muni debt funds and intermediate muni debt funds, which took in about $193 million and $180 million respectively. Moving on to our last group, money market funds. This group had $1.7 billion in net inflows last week, the first net inflows in 3 weeks for the group. The largest contributors were the institutional U.S. Treasury money markets and the U.S. government money markets, which had positive flows of $5.6 billion and $3.4 billion respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data, please take a look at our website at www.lipperusfundflows.com. And please join us here again next week where another analyst will be speaking to you about that week's fund flows activity.